Cheers to Casual Friday and finally, Mr. Market, Retail Trading Team. This is your routine briefing. Well then, in yesterday's video, I began by saying that I could not cheers our lovely market just because of the embarrassingly flat tape that we had seen for a few sessions there, and just kind of the lack of any follow through, the lack of any big move. And Mr. Market looked at me yesterday and said, let me show you what I got going here. And boy, did he really give us an interesting move. It was a really good day for Barb. Obviously, it's a trending strategy. So as we jump to the warm up, we're gonna start just kind of looking at how she was doing yesterday, and then we'll move into what's going on today. I'd say a lot to cover. It's not going to take too long. Yet I think a lot has changed, and so this is going to be an important briefing that will be sure to cover, I think, or I hope, all the major points. And let me just see what's going on in my position here. I think we are about to get a stop out. It has not been a friendly session so far, obviously, for trend action. That's okay. I can't complain after yesterday at all. So, yeah, so we're going to jump right in. Got my Walker Texas Ranger. I think it's a crew shirt. I got this from one of my friends who owns a vintage shop in Canada. So shout out to John Jackson and Snafu Clothing up there. Yeah, so let's start with the warm up on this casual Friday. So looking at just Barb from yesterday, you can just see we did add a nice little chunk to the P&L. I actually had a fortunate error. I had a stop error, so I made in my personal account quite a decent amount more. Yet the way that I do this log is kind of acting as the control variable for the futures experiment. So we're keeping we're going to keep that accurate. So even though if I may outperform myself, we're keeping Barb uh, as the control. So you can just see, I'm scrolling down to yesterday, nice little chunk on that move. And yeah, I mean, hopefully we'll get some more green today. So far, it's not happening yet. I just want to point out what's going on with Barb. We're going to review that every day, and I keep this updated. This is the results-based assumption forecast, which is something I stole from Intervini. Again, I've said this in yesterday's briefing. If you Google result-based assumption forecast, you can get a nice little Reddit link. So go into the first results, and you can get this yourself. And this is kind of how I keep tabs on how everything's performing in my portfolio, and especially it's helpful for future strategies. So as the what's going on in the market here? Yep, as we try to double bottom and stop out of my position. There we go. Um, this. We'll see what happens in the next 10-minute candle. So yeah, so kind of one of those choppy, difficult trading days so far. We'll see how that develops. Yeah, so that's Barb. That's going on there. We're gonna pop into the actual narrative for today, and kind of get our bearings with what might be now a fun market. So the first thing I want to draw your attention to is going to be the rotational look that we have today. It's a little more narrow since the session began, so I was hoping for just for the sake of good trading, a wider range. Really, since my first signal, we've been in a roughly 20-point range. So we're settling in here into choppy action, and we can now enter the IBR. IBR is pretty good today, so as far as I'm concerned, I'm going to keep that idea rotation. Um, we'll look for extensions on either side, but with an IBR of, let's see here, 15 to about 80. So let's see. Yeah, so about 35. Not bad. Not huge, not bad. And we'll see if that continues. Hopefully we don't get these stop runs because too many of these stop runs because that will change that rotational look. This is one of the best profiles to trade in my opinion if it can hold. And so hopefully it holds. We'll see. So that's just the first thing. Obviously the open itself favors the bears, but it's not an open drive or open test drive. One of those often reliable, uh, you know, highly trendy type looks. So again, that's just kind of supporting that neutral thesis. There's nothing weird in the inventory overnight. It's pretty neutral, balanced. Obviously, we had the big move up with the news, and then we retraced it, and so now we're kind of balancing out around this 3,900 area on the H contract, which rolls over, by the way, next week, and we'll see what happens from there. So just one more thing in the warm up is going to be this big move in volatility. When we look at the VIX chart today, forward slash VX chart, you're going to see what was a huge move, and it's reflected in the IVX of SPX. So it went from 18.6 to 23.5, which actually added 2 full points to that average rotation, which is a really big one-day change. And that's just kind of what happens when volatility increases. So that's what I'm looking at in the warm-up. This document is available in the description to this video, just like all the other lovely resources that I will be referencing here. And one thing I didn't mention is Barb, that futures trading strategy is also available if you want to check out exactly what I'm doing without any subjectivity, uh, barring obviously technology glitches that can sometimes be be lucrative. Is you just go to that routine trading folder and look up routine day trading, and you can see what's going on with Barb there. So moving on to the actual price action and kind of trying to speculate, if you will, what we're going to do from here. Let's just start with the most important chart, really, is because what happened yesterday, you had one of those outside bars that knocked us below all major trend lines. So what was really interesting is we got a near perfect rejection at the SPY trend line. This is ES, so I don't keep a SPY chart in here yet. If you look at the SPY chart on your platform, whatever that may be, and you just kind of draw that from the low on October 13th, you know, similar, very, very simple. Just you draw the trend line, you'll see that we got rejected almost at that trend line to the tick. So really cool little technical happening there. And yeah, so we're below all these major trend lines now. We're trying to sort our way through this major December consolidation, which really started that major trend leg that we just saw. And as I've been mentioning, to me, this is a really large demand zone. So we'll play it as trend comes. I'm not going to try to guess where that bottom is going to be, and I'm not surprised whenever we bounce anywhere in here. There's just a lot of demand to unwind, and so we're now kind of pushing it down. So if you look at this green box yesterday, it was way higher. I believe it was actually almost 50 points higher, perhaps more. I'd have to go back and look at the video. So I'll just keep moving that down as we eat up that demand. The important thing though is the location of those trend lines. And now that we're below them, I'm not going to say that we're going to go make new lows. That would be quite the prediction, I think, at this point. Yet we have to assume that the bears do control the trend for now. I mean, you don't have to, but I think that was the most reasonable assumption, especially being below all our various fun little MGI here, all the SMAs, VWAPs, and all that good stuff. Especially with this outside bar zone created, it's definitely a very, my opinion, bearish look. So if we want to move on to the TPO and just kind of, it's cool we're testing that December consolidation, but there's just so many points in between here. So we want to get a little more granular look and kind of investigate what might be tradable. And so just looking at this TPO, first thing you see is just super, super ugly look from yesterday. It's just straight down. You can just look at each TPO. Let me see how many points it is. There's like 50 points of just more or less singles. So I guess not 50, 40, 40-ish. I can't, I need a calculator to add these things. But you can just see that we've created that really kind of ugly look. You got several potential spots of resistance as we do unravel that move. If we do unravel that move again below the trend lines, um, quite decisive, I think. And I just you can just look at these. It's at all the levels you would expect: 45 to 50, 60-ish, 80-ish, and then you have that naked POC right near that 4,000 area. So to the upside, just use those, I think, for targets. Obviously, you can look at trend lines as well. Yet the fact that we're below everything, I think that those upside targets are less important than just looking at that overall supply zone and that overall MGI. It's just going to be a hard grind back up on the bull side. So again, for me, for my strategy, I just play what the pretty candles say. I'm not really trying to speculate yet. I think if you're a premium seller or with a longer term outlook, really, that entire move down from yesterday is, I think, an excellent uh, demand or an excellent supply zone to watch for either laying into any rallies or profit stops or whatever. So that's what I'm looking at on the upside. Downside, again, there's a lot of potential spots for demand, but the most important ones for me are going to be first be the 66 level right here, that naked POC that goes all the way back to that December distribution. And then finally, the most important area for me is there at 3,800 level. If you recall from December, we dropped or we popped from that level a zillion times. One second, I'm about to get a trade here, I think, maybe watching out of the corner of my eye. We popped from that 3,800 level zillion times. So if we revisit it and we start to finally break below, that's going to be, I think, an interesting sign and supporting further bearishness. So really, those major downside targets for me is going to be 65. I think then there's a good amount of space to go back down and retest that 3,800, and then just kind of following these naked POCs all the way down from there. And we'll see. There'll probably be more MGI that becomes relevant as time goes on. In and around here, I think we will consolidate. I don't think it's going to be a plunge down that far yet. We never know. So that's what I'm looking at in the TPO. And then besides that, I just want to look at what I think was the most interesting chart from yesterday, and that's going to be volatility. Look at that move. So if you watched the briefing yesterday, I was talking about how we just kind of were chop land, it seemed, between that 19 and 20 area. And the volatility said, thank you very much. I'll show you chop. Double bottom perfectly, shredded through supports and resistance levels. So made that, went right through 20, went right through this descending trend line, popped above this descending trend line overnight, retested it this morning, popped above. Now we're above this resistance as well. Volatility is really cranking, and you're actually not seeing it in the market right now. So you're seeing as we speak that divergence where volatility is making higher highs and the market is not making lower lows. So what that's telling me is again that the bear move may not be over. Really big and decisive move yesterday, and it seems that volatility wants to continue. So the next level to watch, I'll have to actually go back here. I'll draw a couple horizontals as we hang out here. Next level is going to be somewhere around, let's say, 2360-ish. And then we'll see what happens if we do get all the way back up to about 25, and then I'll revisit it then if that becomes relevant. Back and make sure that covers things. Yep, so we'll see 25. I'm going to go look a little higher. I didn't realize exactly how high we were, so I will have to extend this chart back a little farther. Interesting. Stand by. We'll do this live. Why not? Let's go back 90 days, see if that covers it. Good. Okay, so let's add a couple more levels here. That big one up there. So really the way I look at volatility is not so much as these levels are going to act as support or resistance. It's just kind of telling us, I mean, they may. You can see that little trend line actually worked pretty well down there. When we kind of retested it, that worked pretty well. So they can act, or they can be helpful for informing some assumptions. Yet I really think it's just getting a gauge of just how much fear is being pumped through the market right now. So it looks like a lot. It's a vertical push from that double bottom. Yeah, really until we start just hammering through some of these upper levels and really get above 30. I think above 30, especially in the VIX itself, is when things get super interesting in terms of the long-term forecast of perhaps going after that 3,800 level and maybe even below. So we will see there as volatility continues to move uh, as we complete this briefing. And that's really going to be, I think, the most important thing to watch today. I think a lot relies on volatility. Price action is not so, or levels at least to me are not so clear, at least in this area. You have, like I said earlier, plenty of, I think, upside potential resistances, but as we move to the downside, we are in this big green, what I just see as a huge macro demand zone. So you can speculate, and I am going to speculate as a speculator around where we may bounce. yet I think that you just kind of have to follow the trend until she kicks you out of bed, as they say. So that is what I will be looking at in price action. Again, you can stay up to date by using this warm up document. You can check out some of the cool other resources in those routine trading folders, and I will keep everybody posted throughout the day as things develop. If anything changes, that will be on Twitter. So I'm going to move this live stream to Twitch as I do, and I will send that newsletter out by 11. I will DJ as well on Twitch today from 12 to 1400 as well as I can, which is not very well. So any electronic music fans can come hang out there for that, and you can just put me on mute and watch the live trading always. That's I'm not offended. I just like having friends to hang out with. So that will be spectacular on this Friday. So yeah, like I said, got the routine trader is the handle if you want to check out or message me, chirp me, as some might say on the Twitter. And subscribers to the email can also respond to any newsletter, and that's one of the best ways to contact me because that pops right into my inbox. So, well, I would say Twitter is the best, but that'd be second best. If you're not a subscriber, by the way, please go ahead and subscribe if you'd like the nice package newsletter in your inbox every day. It has a picture of this warm-up document and a fun feature statistic. I think the warm-up document is the most valuable part if you are following any type of similar strategy to myself, as you can get all the major levels, and really these first three metrics just kind of give you, I think, a good mood for the day. Besides that, links to anything else and everything are in the description. And if you did enjoy today's content, please give it a like, as that helps with YouTube's algorithm. And besides that, that's all I have for you. It's time to trade. Thanks for watching, and stay classy until Monday.